Hey gang, Chuck Barone here, Thursday, July the 21st, 2022, and another crazy day in the world of finance today. A lot of news to get to today, guys. It just seems like every day just gets crazier than the last. When you think that you've seen it all, you see something new. It's bananas, guys. But anyway, let's get into the day today. Stock market recap real quick. Stocks were up today. Had a good day in the market, actually, considering the news going around. NASDAQ had a big rally today, led by Tesla, whose earnings came out. They had a pretty decent earnings report. And what I've been gathering is, even despite all their issues in China with their manufacturing plant there, their earnings were up because they've been managing to keep raising prices on Teslas. Got to be careful there, though, Tesla. Pretty soon, you're going to get to a price point where people can't afford to buy Teslas. They're going to start looking for alternatives. So anyway, market stocks today up and at 'em. The bond market, another crazy day. You can tell there's some major intervention in this market. The yield curve remains inverted. 10 years settling down 12 basis points at 2.91%. I don't know how to explain this anymore, guys. I've been talking about this inverted yield curve and these crazy 10-year rates for a while. We know that we're 1 week away from a rate increase of 3/4 of a point. To see rates going down is just beyond me. We'll see where it goes. I think that this 10-year yield cannot stay suppressed forever. It's going to rise. Let's see when. The dollar today down fractionally on the news from the European Central Bank. Still close to 107 on the dollar index, though, so the move was not a major move. But metals, because of this little bit of downward pressure on the dollar, had a good day today. Gold settling at around $17.21 per ounce. Silver at $18.94 per ounce. As I've been telling you guys, keep an eye on this dollar. As the dollar weakens, metals are going to have a nice rally coming up. The oil market was down today. Big pressure on oil. West Texas Intermediate closing at 96.37 per barrel. Natural gas down today. I think a lot of this is profit taking. 7.94 per their bajillion British thermal units. Looks like Russia is, at least from what they're saying, is going to keep the gas on this winter. So we'll see where that goes. I think if Russia doesn't follow through and they turn the gas off, of course, that'll put big pressure on a big spike in natural gas. If they follow through and let the gas flow, well, I think that'll put a little bit of downward pressure on these natural gas prices. Bitcoin down a little bit today, but still strong, over 23,000. It looks like it's kind of consolidating support at that number. It looks like Bitcoin is getting stronger. It looks like it's doing a little bit better. So let's keep an eye. I'm looking for a breakout now, a real determinative move that it's on the way to a big rally and another big upward move. In the news you guys need to know today, quite a bit of stuff going on. The big news, I guess, of the day is the European Central Bank came out today. They raised their overnight rate 0.5 point. The market was expecting a 1/4 point increase. It's their first rate increase since 2011. The press is portraying this as a very bold move. Wow, the ECB, bold move. They raised their rate from -0.5 to 0. I guess if that's a bold move, it's new definition for what bold means. It looks like it's just another signal of what we've been saying since day one on the show, that this easy money era is coming to an end. Even the most reluctant central bankers are starting to realize this now, and we're going to be seeing more rate increases coming from the European Central Bank once they kind of figure out how to not destroy the lesser of their economies in the Union, the Portugals and the Italys and the Greeces. That's where they're worried about this fragmentation. We'll see where the ECB goes, but a move today raising rates 0.5 point. The Philly Fed Manufacturing Index came out today. Not a good report here, gang. They were expecting 1.5 increase. Instead, they got a 12-point decline. That's a pretty big difference in what they were expecting. Growth in manufacturing, instead they got pretty big contraction. Not a good sign. And just all of this keeps pointing to what we've been saying. The recession is here. Every day we're getting more and more signs that we're going over in this show. Batten down the hatches, guys. We know what's coming. Let's make sure we're prepared for it. Another big piece of news that I thought was interesting today, and you need to know, Blackstone, the big, giant private equity fund, the biggest in the world, just finished a $30 billion money raise for their real estate fund. $30 billion. Now, they did this once before. They came into the market. The last raise they did for real estate was $20 billion, and it literally changed the real estate market. It led to a whole bunch of copycats, all the private equity guys, all the venture capitals, even pension funds, everybody getting into real estate now. These are the guys that were driving these massive price gains, overbidding for properties, paying over appraised values, totally distorting the market. Now with this raise, it's really going to put big upward pressure on real estate. We'll see how they deploy this money. They just finished raising or getting their commitments to raise. So I don't know if they're going to have this money ready to go, like how quickly. But once this money gets into real estate, again, it's going to completely distort the market from what it really is. I believe that they're going to just kind of sit on the sidelines and let this market kind of correct. And then they're going to come in all at once with all this cash and totally blow the market up again. Back in the days of the last real estate crash, Matt Taibbi was making fun of Goldman Sachs and labeled them a vampire squid, with a really interesting picture of the squid's tentacles wrapped around the country and sucking the blood out of the country. Well, I think that Blackstone and all their friends, BlackRock and all the rest of those guys, they're the new vampire squids, guys. Profit at all costs, and the hell with the country. Thanks to these guys and the corporate takeover of real estate, median rents, they just reported this today, median rents in the United States in June hit a new record with a median of $1,876 a month. Does anybody believe that that's a sustainable number? Does anybody believe that people are comfortable paying that every month in rent? Now remember, guys, the median means 50% or lower and 50% or higher. Okay, so half of the rents in the country now are higher than this $1,876 per month. Who's paying that? Who can afford that? I'm a guy sticking up for the middle class here. I'm a guy that's a working guy's hero. I want the working class to do well. The advice I give and the things I talk about are all aimed at middle class people. These numbers and this corporate disregard for the middle class and how they're doing in this world, I don't know where this leads, guys. I mean, $1,876 a month. Now, I do pretty good for myself. But if I had to stroke a check every month for $1,876, I would be angry every month paying my rent. And this is not even with the benefit of ownership. This is just for the privilege of being able to stay there. I don't see how it's sustainable. But knowing that Blackstone has another $30 billion to come into the market with, I think chances are it's going to go up rather than down. So batten down the hatches, guys. The commentary I wanted to talk about today, a couple of really interesting things going on. And I think what we're going to be seeing here is a giant jump in unemployment coming up. It's already starting. Now the avalanche is going to start, though. I was reading today, Ford announced they want to cut 2,000 salaried white-collar jobs. And they want to cut $3 billion in cost over the next year. And when you hear a major corporation say they want to cut costs, that always means the same thing, guys. It means they're going to cut jobs. So they're cutting 2,000 already. They want to save $3 billion more. That leads me to believe more job cuts are coming there. Now you add this to the companies that have already announced giant cuts. Mortgage companies, real estate companies, big companies, Loan Depot and Redfin and all the Wall Street banks and all over the country, people are announcing more and more job cuts. It's going to start that snowball down the hill faster and bigger. It's just going to get ugly. The unemployment is the last domino to fall in this economy. It's the only thing they're holding on to say that the economy is good. Look at the unemployment numbers. Party's over, gang. It's going to end now. And that we're not even talking about all the small businesses out there that are laying people off that don't get announcements in the Wall Street Journal. It's what we got now is a new trend. Okay, the trend has been up, 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 up. Now the trend is down, 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 down. The unemployment numbers that came out today were the highest in 8 months. It's going to get ugly. So if you have a job, do everything you can do to keep it. Do what we've been saying. Hold your money tight, gang. Save your money, because down the road you just might need it. And further evidence of this, I was reading an article today that said AT&T has cut their cash flow estimate for the year by $2 billion. Now, something tells me AT&T isn't going to want to eat $2 billion in costs without that income coming in. So that's just going to add more now to this unemployment cuts. You'll be reading about AT&T cutting jobs soon. It's getting ugly out there. Unemployment is coming. Like I say, it's the last domino to fall. When it does, the whole economy is going to go with it, guys. Another important news today, I'm sure a lot of you have heard on the news that President Biden tested positive for COVID today. I think everybody tonight, before they hit the rack, should say a prayer for President Biden, only for the reason that if anything goes wrong with him, we're looking at President Harris. With all due respect, I don't think that would be great for the environment we're in right now and what we're going to be facing in the very near future. The White House making me laugh today. They're already coming, I know they got their economic team out there, already coming up with excuses because it looks pretty sure now that the second quarter GDP will come in negative. The Atlanta Fed with their GDP tracker is still showing negative 1.6 for the quarter. You know how they do that. That'll be revised higher later. So now the White House is coming out with their economic team saying, well, even if second quarter GDP is negative, we're not in a recession. No. Disregard anything you've ever learned about economics. Disregard the definition of what a recession is. Disregard what your eyes see. Believe us. We're here to tell you the truth, guys. They say before the big kaboom, there always has to be the farce. I think we're getting into that farce today. Now we're going to change the definition of what a recession is. Anything to suit their political purposes. This is none of it good news for us, the working guy. So the things we've been saying to you are more important now than they've ever been, guys. Save 10% of your income. Learn to live within your means. If you can possibly avoid it, don't add any additional debt. Do what you can do after you've saved your 10% and paid your bills to pay down any existing debt you have. The money you have, and if you want to invest it conservatively. This is not the time to be reaching for gains. I saw an interesting statistic yesterday. On the S&P 500, there was one new 52-week high as opposed to 29 52-week lows. So they want to kind of make us believe that the stock market is rallying somehow. When you got a 30-to-1 52-week low compared to 52-week high, how is that a rally, man? So we already know what's coming. We already know what we should be doing. Guys, now's the time. Take care of yourself. Look out for your money. Know that this is not the end. It's just the beginning. Do the things we've been suggesting, and every one of us is going to get through this recession just fine. know that better days are ahead. I know that a lot of the listeners out there don't want to hear this, but I really don't believe this is the end of the world recession here. I think it's been overdue for a while. This economy's been a little overheated and overpriced. Now we're going to get back to hopefully a little bit more normal of an economy with normal growth instead of some of these stunning, crazy growth patterns we've seen. Anyway, guys, I appreciate you taking the time to watch our videos. Your support means the world to us. Please, as always, ask your questions and comment on the videos. Hit the like button if you like what you're hearing here, you believe it's useful. Share the videos with your friends and your subscribers. If you haven't already, subscribe. Don't forget to ring the bell to get your notifications. Don't forget about askchuckbarone@gmail.com. If you have a more deep question that you don't want to put into the comment section, I've been doing my best to get to those. I promise I'm going to get to every single one, no matter how long it takes me. In the meantime, guys, that's all I have for today. We appreciate your support. Until we talk again tomorrow, take care. Thanks.